Good afternoon. It is Thursday, April 9th, 2020. Dan Murphy here. Seth Rivers is with us as well on the screen, working remotely from home. And we will not be in the office tomorrow for Good Friday. So before we start, we'd like to wish everybody a happy Passover or blessed Easter. We know it's difficult situations with churches being closed and obviously, big holidays for families all around that won't happen. So we hope you make the best of it, and that you're all safe and sound and healthy. So we wanted to kind of go through some quick slides today. This is I can't even keep track anymore of the amount of videos we've done since the beginning of the year. But this is our April one, and it's important as well. We try and go through not only what's happened in the market, but also kind of what's going on with the coronavirus situation right now as well. So we'll try and keep it brief, and hopefully it will provide a lot of value for you and for your family as well. So what I'd like to do is is starting off on the opening slide there. Coronavirus and financial markets. We're going to tackle both. I guess the biggest thing is, this is maybe a couple days old as far as the numbers that you're seeing in front of you on the screen. Basically we're about 1.5 million of those cases that are worldwide right now. We're seeing recovery rates go up dramatically, which I think that is important as well as we kind of get into some further slides as well. The other thing that we like about this slide is that, listen, it's not easy, right? When we look at what's going on right now, especially as we know it in the United States, I mean, we're looking at about 418,000 cases right now in the United States. That's certainly a large number. Just yesterday alone, 18,000 cases. So I think it's important to know that when they talk about that we might be peaking, especially in New York, maybe only in New York. I know it's hard to kind of realize that because every day you see the amount of total cases in the United States on the rise. So I think the biggest thing is that we're looking more so at the amount of deaths, right? Which right now, a little over 14,000 yesterday in New York. Unfortunately, I'm sure you're all aware of it, but we had almost 800 people that passed away from coronavirus. Horrible, horrible day yesterday. But it's also a function of two things. These people that have passed away most likely are people that have been on ventilators now for over 14 to 21 days, sometimes longer. So, naturally, the results that they talk about is that the longer someone stays on a ventilator, the less chance they have of coming off the ventilator. And so, these people, massive numbers, and probably will continue to either, go up a little bit more each day. I know that they're still deciding between, where's the actual peak at? Is it now? Is it in 3 or 4 days from now? But we still think that they're forecasting and starting to really look at some positive numbers on the other side. The positiveness of it is that there's less people now coming into the hospitals. If there's less people coming in the hospitals, less people will go on a ventilator. Less people on a ventilator, then that means 2 or 3 weeks down the road, they're not coming off of a ventilator, unfortunately, on the wrong end of it. So, when they talk about the plateau and what they're looking at, you're going to see that we believe that these total cases of coronavirus in the United States, across the United States, are going to continue to climb because it is a function of doing more testing. And the fact that they've figured out now that as much as a third to a half of the population that is testing positive for coronavirus are asymptomatic. They're not showing signs. And so, that is very difficult and a serious game changer for the coronavirus, at least getting a good hold of it, will be the testing. We'll be able to give everybody a test and see how many people were going through this. I mean, our 4 kids, as you know, they're all older now. They're all through college, out of the house. And, but boy, since they were always all close together, our kids, if one was sick, then they all were sick. And so we went through a 2-year period between my brother's children and our children, 7 of them total, where they passed around strep throat, gosh almighty, for a couple of years back and forth. And it wasn't finally until we figured out that, our youngest son, Jack, who's 22 now, he never had strep throat. And so we thought how amazing that was, that, he really just, had either a strong immunity or whatever. But lo and behold, the last couple of times when we brought him with us and tested him, even though he showed no signs, he was actually the one with strep. And so basically he was passing it around to all the kids all the time, not showing any symptoms or signs. And he was really the carrier. Once we kind of got that all figured out, then strep throat never was a problem in the Murphy household anymore. So, we try and tell this to our daughter today as well. Unfortunately, she's with us right now from college, senior in college, her semester's over, and she's back with mom and dad, not too happy about it. But, of course, she wants to go see her boyfriend. She wants to go see her friends. And we tell her that, you can't do it. You just can't take a chance right now that you're asymptomatic and now you're going to affect somebody else. So that's important, that you kind of look through these numbers and see kind of how this progresses. You're going to continue to see the numbers climb for the USA in cases, in total deaths. But as long as they start to see that the hospitalizations and ICU beds are going down, then that's what you want. It certainly won't stop us and relieve any of the things that we're doing right now, which is obviously staying put, right? Staying in our houses, all bundled up and safe and sound. But it's a good thing to kind of see at least this part of it starting. The next slide kind of goes through state by state and breaks it down. I'm not going to spend too much time on it, but basically, if you look at it right now, here's New York, 149. The day before yesterday was 779 deaths in one day. Yesterday was close to 799. I think it was 799, so almost 800 people. I know it's just hard to believe that you're talking about numbers like this, but as we kind of move from the eastern coast towards central, and then obviously towards the south and then west, they're going to be peaking at different points too. And so it's not over for us. It's certainly not over for them either, but we will most likely peak at some point next week. Some are saying this Sunday, some are saying next Tuesday or Wednesday, but a week from now, we could be on the other side of it, seeing our numbers start to finally go down instead of increasing all the time. And that's obviously important as well, as we kind of look towards, getting a good grasp on this. And that's what we want to see, obviously. That becomes a unknown that changes to a known. You want to cover this one, Seth?
Sure. One of the things that we've seen, and I think the Governor Cuomo said this the other day in one of his press conferences, that the deaths that you're seeing, especially on those first 2 charts, they're a lagging indicator. And really what they're looking at is the people that are in ICU, and they're looking at the number of new hospitalizations. For the first time in the past week, we've actually seen only single-digit increases as far as hospitalization rates. And for weeks and weeks before then, we were talking 20, 25, 30% increase per day. So one of the things that we've seen in New York specifically is they've tried to ramp up the infrastructure for the healthcare system by bringing in the hospital ship, opening the Javits Center to be able to create more beds. They even initially had hoped for the U.S. Comfort to just be non-coronavirus patients, but they've now opened that up just to provide that extra capacity. So with this slide, really what we're trying to show is they had to raise that line, the increased healthcare system capacity, while still having the social distancing in place to be able to spread that curve out. But without those two things, we could have had a much worse situation than we're even seeing right now. And even in the past week, we've seen 2 or 3 revisions downward from that estimated death toll. So we don't think that, obviously we can't put a date on it, but we are starting to see those positive signs, especially in New York, and especially it being the largest hotspot in the world.
In this next slide too, and Seth, you can make some comments on it as well. I mean, it's a busy slide. It talks about obviously the cases, especially in New York City, by age. And as you can kind of see here along this line, you've got a good amount of people that are, 18 to 24 years old that are getting coronavirus. Predominantly, it's the most, that's the biggest category that's showing signs. But the difficulty is only 8.7% of those people actually get hospitalized, right? We're not worried about who gets coronavirus. We're worried about who goes into the hospital and then who goes on a ventilator afterwards. You've got much less people that are 75 years old getting it, 6,900 versus 25,000. But look at the difference, 50% of those people that get coronavirus that are 75 and over, you got a 50% chance of going into the hospital. And then from there, those people are going to go on a ventilator. In that case, you're looking at 16% basically a death rate. So 1 out of 3 people then that go in the hospital are going on the ventilator and not coming off of it. And so that's the key thing as we look at these stats. It's certainly broad ranging. You can see that as we look at it overall, there's a ton of people in every category, but 18 to 64 are where most people fall into place. But those aren't the problematic people. Even if they go in the hospital, it's still such a small chance of death in those areas. You're talking less than 3% total between 18 and 64 years old of them dying. It's the 65 to 75-year-old category where it's big numbers where they're passing away. And so, the key thing is that for the people that are, asymptomatic, not showing any signs, and going over and seeing a grandparent. I mean, my mother is basically almost in bubble wrap now. And that's great because she's taking it seriously. She's in her place. She's social distancing. She knows that she's got some health issues and she would be problematic. And because she's over 75, 50% chance of going into the hospital. And that's without, normal extra things that could cause you to end up there, diabetes, heart issues, COPD. I mean, a lot of things can, add to your chances of having to go to the hospital. And that's the biggest thing that we want to try and avoid. Let's talk a little bit about the market, right? So, clearly in this case, we're trying to get some balls out of the air, right? And that's what the market's all about. But look at the market. I mean, the market from February 19th until March 23rd, you're talking about a drop here of almost 34%, okay? Why is that so problematic? I've gone through the numbers a lot with people over the years, and what you've got to understand, it's sort of like losing weight, right? When we go on diets, it's much harder to take off weight than obviously putting it on. You can put it on very quickly, but taking it off is the problem. The problem is if I'm losing 34%, it takes me much longer to make that back up. If I gave you $1 and you only gave me 66 cents left, you've got 34 cents of my dollar. So for me to make up that 34 cents, and I've only got 66 to make it up with, if you put those numbers over each other, 34 over the 66 is 51%. So I lost 34% here when the market went down, but now I've got to go back up now 51% just to get back to break even. So look, the market's made a nice little recovery, not little, large. It's made a nice little recovery in a short amount of time. But, there's a couple of reasons why you should be a little bit concerned about that, maybe a little guarded. This is not over yet, okay? It's a nice way of looking at it. They're talking about, at least that the press is talking about that we are officially out of a bear market, meaning that we've made up enough ground from the bottom till now where we're not 20% down from the peak anymore from where we were, okay? So once you get within that 20%, you're no longer in a bear market. Doesn't mean we can't go back into one, but right now officially, you're basically out of the bear market. That means we've got less than 20% to go to get back to everything that was in the market before the market started. Doesn't mean though that this is over. It just means that we made a nice little run here, but we've got a lot more to go. Okay, so basically that's what this next chart shows you, right? So again, down 34, got to make back 51 just to get back to break even. Gonna take a lot of time to do it, and we want to kind of be somewhat careful about it too. History shows us that there's a potential for a double dip in the market. So they talk about a lot of different market variables today. Is it going to be a V-shaped recovery? V-shaped recovery means you go up or you go down dramatically and then right back up. Seems like that could be one, right? Because right now, if you see the market continuing to climb, there is a chance that it could be a V recovery, right? Down and then up very quickly. The more likely scenario is that, it could be a U-shaped recovery, which is you kind of hit the bottom and then you stay on bottom for a while and they'll go back up again. But we've already recovered some of that, almost 30% recovery from the bottom, if you look at it that way. Most likely it could be a W shape where basically that's exactly what happened. Went down dramatically like the first part of a W, went up 30%. It could either continue to climb back up to that 20 or start to go back down again, okay? It wouldn't surprise us either way if it is a W recovery. I mean, we would expect it to retest. In other words, a slight bounce off of it. I mean, basically, when you look at, the last time that we had a dip in the market in 1987, this is exactly what happened. I mean, you looked at a market W kind of forming and then back up again a little bit, and okay, we got some good hope here, nice little recovery, but boom, retest, back down again, and then, back up and then eventually, finish the W. And so we would expect that this is really the more likely scenario. So don't be surprised. We're expecting it. You should expect it too. I've had some people reach out to us and say, hey, it's a good time to buy. Should I be putting money in? Because if the market's, rebounding nicely now, I'd like to kind of capitalize on that. You may have some better opportunities, unfortunately, or fortunately, however you're looking at it. The key thing is that most of the experts, most of the portfolio managers, economists that we speak to on a daily basis say it's more likely for there to be a retest of that bottom that we experienced, March 23rd, than not having that, right? So we want to be prepared for that. We want to know that it's a possibility. We want to know that there's a reality, and typically in periods like that, if we go through a period where this market, drops the way we're expecting it to again, and we go back down into this valley and we retest those lows, many people give up. Many people say, okay, I've had it, enough. I was willing to let it recover here, but I thought it was basically the end of it. And now all of a sudden it's going back down again. And so the key thing is for us, we want to be ready for it. We are ready for it. And this way, when it comes, we're not going to be terribly surprised. What we know, what we don't know, okay? So what we know is pretty significant. Basically, when we look at what's happened out there, the first thing the government has done is they've provided a tremendous amount of stimulus. On the personal level, each person that makes under $75,000 is going to get $1,200 check. Family's going to get up to $3,000. That's going to be coming very soon. That's stimulus, right? That gets you either spending it, or maybe you'll use it for rent or a mortgage payment, or, especially if you've lost your job. So, but it's definitely stimulus that will help a certain population out as far as, spending that in the economy. And some of that will be spent in the economy. Now, where are you going to spend it these days, right? Other than the food store or bills that are coming in, you got no other place to spend it. You're not going to travel. You're not doing anything else. I mean, that's obviously the plus side of it. So the Fed's taken unprecedented action in putting these stimulus packages together. But the virus hotspots are also starting to level off. And that's an important ball in the air that just came down. Now we may not have to worry too much about this virus anymore. Yes, we're still going to worry. How long is it going to take? How much longer do we have to social distance? Today I was going to golf with some friends on Sunday for, Easter Sunday, and they closed all the courses again today until April 29th in New York State. So, but there is a light at the end of the tunnel as far as that goes. Life has changed for all of us, and it may change forever, right? The new norm that we may have, you may not have people handshaking anymore. You may not have people that want to sit next to each other. There may be a lot of things that change as we kind of see it going forward. All of these things that I've highlighted have caused the market to make a nice increase from where it was March 23rd, down 34%, to where it is right now, okay? Down lower than 20% from the peak of the market in February. But it doesn't justify that the market should shoot back up to where it was in February because of some of these balls now that are out of the air. We still have, in 3 weeks, we've had 15 million people apply for unemployment. And I got news for you. I mean, you can't have 2 weeks in a row of exactly 6.6 million people claiming unemployment. What's happening is these systems in every state across the country, including New York, are taxed. They're crashing. People are on the phone constantly all day long. You can't get through to file an unemployment application. And if you can't get through to file, then basically you have to try another day. These people haven't even gotten through yet. So there's no way that it's a coincidence that you had exactly the same amount of unemployment applications filed in 50 states across the country 2 weeks in a row, okay? So you're gonna see those numbers continue to climb. Once the coronavirus is maybe contained, maybe we go back to some normalcy, maybe we all go back to work, then we've got to get people working again, people spending money again, and the economy has to start getting back on track again, right? And so as much as there's things that we know now, there's still a lot of things that we don't know. How long will it take for the economy to come back again? How long will the impact be for? What more needs to be done? They're already talking about another stimulus package to be the fourth stimulus package. What's the next hotspot in the U.S., right? Where just because New York maybe peaks in the next couple of days, and we're certainly a major hotspot, there are other countries other states that are about to follow us afterwards, right? So, how long is the tunnel? And then what changes will be permanent, right? So, there's an estimate now with the amount of restaurants in New York City, half of them may not reopen afterwards. I mean, that it's a tough business anyway. In spite of that, you've got to staff everybody again. You even if you got funding from the federal government to, pay employees along the way, you still have food in a freezer or refrigerator that has to be thrown out, start over again. You got to catch up on rent, on other bills as well. It's a lot to it, right? So and most restaurants are living on such a small margin anyway that you may never see them open again. There's going to be some things we're going to have to get used to. The point of all this is that there are more things that are going to cause the stock market to be volatile as we kind of move past this point where we stop focusing on loss of life, right? Overtaxing hospitals and, obviously being under house arrest, if you will. We're going to get past those things, but then we're going to start to focus on the economy then, and it's not going to be pretty for a while. And we're really going to have a tough time with it, but certainly all the stimulus packages will help. But we're certainly not out of the woods yet by far when you kind of look at everything else that's out there as well. Seth, how about you take the next one?
So this is an unprecedented action and quick action by the Federal Reserve. Pardon me. They actually are up over $7 trillion in assets now after the stimulus that they released today. What's significant, and especially with regards to what they're doing, they're buying a number of different securities out in the market. And one of the more significant things that they've done now is they're actually buying corporate debt for the first time in history. So these are bonds that are issued by companies that have just been hammered in the market over the past month or so. The Federal Reserve is now buying this quality U.S. debt. And this is significant. I mean, this has never happened in the history of our country, that the Federal Reserve is spending this kind of money to provide liquidity to the bond market. Really what we saw is all of this high quality corporate debt and municipal debt has unfairly been sold off, and the prices have just been hammered down because you needed to provide liquidity for people that were losing all of this money on the equity side. So what the Federal Reserve did is they stepped in, they started buying this corporate debt. They've also provided liquidity for municipalities. And I mean, Chairman Powell even came out today and said, well, we're not going to stop until we make sure that we really stabilize the system across the board. At this stage of the game, they really have had an influence on pretty much every area that they can, other than the actual stock market. This slide is kind of jarring. On the left here, these are initial jobless claims going back to 1990. And just this one line from the last week of April, you could see we were always, basically under, 300,000 across the board for the past 30 or plus years. And this was just the one hit for the 6 million. Now we have a second one plus a 3 or 4 million initial jobless claim hit. Just the numbers that we're seeing are so dramatic on the unemployment side. I mean, Dan and I were talking this morning that we're convinced it has to be the capacity issue that he was talking about. But also the stimulus act that they put into place, it's important to understand and put it into historical context. We look at 2007 through 2008 to 2009, and just how horrible the financial crisis was. And we remember all the bailouts, all of the bailouts to the auto companies, to the banks, to everything. We're not really seeing those kind of bailouts right now, obviously, but just the size of how much money they're putting into play. Back in 2009, the $787 billion that they had in the American Recovery and Reinvestment Act, it represented about 5.6% of our total gross domestic product. We're more than double that with the coronavirus aid. They're putting 2.6 trillion, and that's about 12% of GDP, and that's just with the CARES Act alone. So you can imagine, I mean, the number of different programs that are going to be going out. This is going to have a significant impact on how the economy recovers. I've seen a number of different studies that say just the act alone will save between 6 and 7% of negative GDP. So our lives have certainly changed. I mean, for some of you that I've met, you know that I have two little boys at home, and there's been an adjustment time for us. And I could certainly say that there has been a number of these that my wife and I have Googled. So, for example, how to keep kids busy on the far right in the middle. Toilet paper delivery. I'm sure some of you have Googled that as well. What to watch on Netflix. Really, we wanted to include this slide because we don't really know how everything's going to change. We don't know how many of these things are going to become commonplace. One of the things that we do as a family in my house is we've been having our groceries delivered. We don't want to go to the store right now. How many of these sort of creature comforts that you're now starting to use on your own, will those become a normal thing in our everyday life? How to cut hair. I'm certainly on that bandwagon as far as needing to get back to my barber. But the point is, we are going to get at well, hey, I just don't want people to start to see my gray, Dan. So,
Yeah.
So when we eventually do get out of this, how many of these things, I mean, there might be certain industries and certain areas of the economy that are just never going to get back to where they were. We're going to get to the end of this, and life is going to get back to a new normal. It's not going to be the way that it was before. Just fundamentally, things have changed. And so just wanted to show a number of different things, especially with, kids that are being schooled at home, doing remote education. It's interesting to see just in this short month period of time, how many different Google searches and ways that people are adjusting to this new normal. So good fortune is what happens when opportunity meets planning. Thomas Edison. I really like this quote. And I'm going to turn this back over to Dan, because we always base everything on our plan, whether it's the plan for the firm, our plan for the portfolios, or our individual financial plans with the clients. It all comes back to that. And we base every decision that we make on what plan we have in place, whether it's with the clients or with the firm.
Yeah, and that's key. I mean, a lot of you have either come on board with us in the last 10 years, or obviously been with me for, most of my 33 years. And we've always kept people, on their plan. When we meet people, we always ask them, how much you need to make. And we're always fascinated that, people don't ever sit down and figure out what return they need to make to make their lives be financially independent. So they never have to worry about things anymore. And many of you, we've taken out of more aggressive portfolios when we met with you, because when we ran your plan said you're just taking a necessary risk, and the reward just not worth it. And so the key is for us is, not going through those periods where we lose 34% and have to make 51 back. It's another 17%. We'd have to make back up. If we're down 10% for someone, hypothetically, we've got to make 11 to get back to break even. It's another 1%. Even if we're down 20% for someone, we've got to make back 25. It's another 5 you didn't want to make, but it beats having to make another 17 because you lost 34%. So working on those portfolios for, at least the last couple of years for us has been important, knowing that we were headed towards a recession. No question in our minds that we're in one now. But now the question becomes, how long are we going to remain in one, and how deep is it going to be? The long-lasting effect. Is it going to take a long time to come out of it? And what happened in the meantime? How far did the market go down? So, there have been worse periods where the market's gone down a lot more than 34%. I just don't think that people are used to seeing it go down 34% so quickly. Even in 08, 09, it went down more than that, but it just took us longer to go from that, where you had basically banks going out of business in 08 and 09, to get to the bottom of the recession. The market lost a lot more than the 34%. So having that financial plan built in mind for you, knowing that it's there for that reason. We were ready to do this. We certainly didn't think the coronavirus would be the impetus that got us to get to where we're going right now. But, we feel really comfortable with the way the portfolios are right now. Some of the portfolios have some cash still in them. Some don't. So it all depends on what the investment objective is for that particular portfolio. But our plan takes into account future volatility, so we're ready for it. We may get to a point where if the market really becomes a solid bargain again, that we certainly, we'll look at other areas that have been beaten down maybe more than they should have, and making changes. Stripping out emotion, that's key for us, and basically, making fact-based decisions about the plan, about where to invest and what's going to be the best for you for your plan. So, where do we go from here? Really the same, right? We're basically beating the same drums that everybody else is, which is obviously remembering to, stay inside. As much as I hated for my golf event to be canceled on Sunday, we're outdoors. We know that we're helping get to that end, that end of this period where we can go back to, some kind of a new normal. That we'll all kind of, have to get used to. And obviously, wash your hands, don't panic. I can't say for definite that you're going to see more market volatility, but I got a feeling, I've been doing this for a long time, and this is not over yet. It's nice that the market has rebounded, but the market rebound has gotten ahead of itself. We don't even know. We still have more people filing unemployment claims every single week. And we certainly got a lot more people unemployed than 08 and 09, even though we have more stimulus that got thrown at people. So we have to wait and see, just because the market's rebounding, take it in. It's a nice calm day, but know that this is going to get worse before it gets better. At least we think it should. And we would love to be wrong and all of a sudden the market slingshots back up. But based on the unemployment claims that are out there and the businesses that are either out of business altogether or have yet to come back once the economy opens back up again, and then we kind of just, see our way through it and see what's going to happen in there. Trust in the plan and the process we put in place. And we're here for you. If you have any questions at all, that's why we have a full staff. They're all working from home. I'm in the office each day, Mark Manning, a gentleman that is also a financial advisor, tax preparer. He's doing tax as well, but we're both in the office. But certainly, everything is operational the way that we always are. I mean, if you call the phone number, Nicole's going to answer the phone and direct the phone to whoever it's got to go to. We're all ready for you. If you need anything at all, that's why we're here. That's the key thing. So, we want there to be that what you're used to having all the time, which is, we're open for business. And, we will continue to stay, closed in that respect for the rest of the month. We're doing our part for social distancing. It's easy for me to do it. I'm only one in my office, and I can do that. But realistically, I think if we all do our part, we'll be in much better shape afterwards, and obviously, going to be quicker to come out the other side of it as well. So, if you need anything at all, please don't hesitate to reach out to us by phone, by email, any of the staff, Seth, myself, TJ. You can contact any of us for any reason whatsoever. So again, as I started, have a great Easter, Passover if you celebrate that. Enjoy, what you can. Hopefully you're able to communicate somehow with your family, whether it's a Zoom conference, whether it's some kind of video or Skype or FaceTime or whatever. But thank God for all the technology we all have today. But we wish you nothing but the best of health and happiness, and we're here for you. So if you have any questions at all, we'll be here on Monday. We'll close tomorrow. Nice 3-day weekend, but we'll be here to service anything that you need coming up on Monday and beyond. So, all right. Well, enjoy this. Pass it on to anyone that needs some help as well. And we've got a lot of people that have asked us to, if it's okay to pass this on to family members, friends. Of course, it always is if it gives them comfort. and some reassurances, then we're glad to do that as well. So I hope you enjoy it, and look forward to catching up with you soon.